Hey guys, welcome back to my channel. So in today's video, we're going to be talking about entries and exits. Okay, so I got a lot of questions on entries and exits. So entries are your point of interest with your break of structure or rejection candle. Now, rejection candle is not the best one just because it's subjective to time frame and it may be hard for beginners. Break of structure is the best. There has been times where I just entered based off a rejection candle alone. Today, we're just going to be talking about entering off a break of structure. Now here we have a candle. We're pretending this is candle, and it left this huge gap, okay? So this imbalance right here, and price is coming back to this gap. So if you check out any of my break of structure videos, guys, this is pretty much what we're doing for the entry. So we come here, we tap into this point of interest. Once we tap in, we're waiting to break the previous structure, and that would give us a break of structure, which would be here. So as soon as we pass this line, boom, we get that break of structure. Okay, so once we get that break of structure, then we're looking for a 50% retracement that is already coming from an area of imbalance. So there might be another mini imbalance right here. Okay, so once we tap back in to this new imbalance, that's when we execute. This is when we actually click buy. This is when we click buy. So you can have a mini alert here, however you want to do it, but this is the entry. Stop loss below whatever candle low right here. So let's find an example live on the charts. Okay, cool. So in this particular scenario, this was the previous point of interest. So sometimes you're going to get a tap in and you'll get a break of structure right away, or you might get a clean schematic. So in this case, we did get a schematic. So we did get a schematic, and then we got this huge impulse up, giving us our break of structure, our up thrust. Okay, so after that, we do want to look for 50% retracement. Now, in this particular scenario, let's look at our 50. Our 50 is here, which is filled. This is already filled. Everything is filled except for all the way down here. So because it's filled around 50, we're going to have to use the lowest imbalance, which would be right here. Okay, so if we use this area, let's put our stop loss. We're on the 15, so we can afford to use the complete spring. Oh no, we can't. See, yeah, I prefer not to. Let's go. Okay, let's see the stop loss we can afford on this. So I'm going to use the 8.5, which is giving me here. So yes, that's not a candle below, but sometimes when you're in the lower time frames, this is the type of choice you have. Okay, I don't want to use here. It's a little bit too close. So I'm going to use the open of the last up candle before the down move, the last down candle before the up move, sorry. This candle right here, and that should be touching because over here we do perfection. So let's zoom in, get it right. Okay, cool. Now my take profits, you know, we want to talk about entries and exits, guys. Take profits are equal highs. When we have this break of structure and we have this up thrust, guys, literally it can be at the top of this range, but I would make it sooner. I wouldn't make it the wick. I make it around here, these bodies. But it's going to be based off our risk to reward. Okay, so let's start here. And we're only going to do 1 to 10s. People ask me about exits and then still drag their risk to reward and to be like, oh, I have a 1 to 40, but it doesn't execute. And you're sitting there stalking the trade. Get out the trade. Just get out. There's more trades. You don't need to. I mean, if you want to swing, that's up to you. I'm not against swinging. I personally don't really. But if you're struggling and you're stressing, get out the trade, like especially if you're not in a dope entry with the trend. That's the only time you should swing. Swinging is not being in a trade for a long time and hoping it goes up. Swinging is being on a higher time frame, getting it on the low and letting it play out with partials. So, you know, a lot of people are like swing, 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 but you know, you have to swing right. You can't just be in a trade and want to hold it and be like, oh, I want to be a swing trader because I want to hold this trade because I want the TP forever. No. Okay, so anyways, guys, here's your 10.8 risk to reward, perfectly aligning with these bodies as a 1 to 10. Okay, nothing more, nothing less. Now let's watch it play out. Just gonna pause it for you guys. Okay, it doesn't tap in by like a pipette. Let me just drag it up just so you guys can get that line. And now let's get out this trade. Let's smash the take profit. Now let's pause this, guys. I didn't practice this before I record. I just record because I show you guys real time. I don't care. This is how I trade. You know, I don't have to look like a crazy trader. But this is why exits are important. Exits are important. Oops. Right? Maybe I should have got out earlier at this wick, at this support area. I would have been tapped out. Right? This is why I don't just drag it up the screen, because now I'm in all this drawdown for absolutely no reason. So let's see if I even get taken out. I finally get taken out. Luckily, this is the 5 minutes, so this retracement isn't anything crazy. But if I was on the 1 hour and I was in here for extra 3 days, I would have been mad as hell. So here's your entries and exits, guys. Now, when it comes to exits, like I said, you want to get out at the first equal highs, but you don't want your equal highs to be all the way up here. You want them to get out at the first time the market started stuttering. You can kind of think of your, lack of better term, I guess you can say. I'm going to say lack of better term before the internet Forex people come for my life. But like your preliminary support, right? Your support, your last point of support, which would be right here. This is where the market, as I say, starts stuttering. Starts, looking at this area as, okay, what are we going to do here? So that's how your exits work. You want to get out the trade personally, I want to get out the trade as soon as possible. Anytime I'm holding on in partials, by the time I keep coming back and checking this trade, I could have been in 14 new ones. That's just how I see it. Again, unless you're swinging from the higher time frames from the super low, don't think you can swing every trade until next year. Because then I just feel like sometimes if you're like a master trader or whatever, okay, cool. But I just feel like, if you're still learning, like, just practice the plays first. So yeah, if you would have, gotten here at the right time, you went crazy up 500 pips, and that's amazing, a 1 to 58. But don't expect these moves every time, guys. The market goes up and down. Just get in on your up and get out at your down, and vice versa. So hopefully this helps you guys with entries and exits. This is just a typical markup for me. This is just a tip. Like, there's nothing more. People are like, longer videos, more details. Guys, pause this video, watch it 47 times. Once you watched it 47 times, comment 47 in the comments below and win a free membership. I'm joking. And if you guys want to see more examples of this, guys, I have free resources on my website. Okay, so if you guys literally go to chart gallery on the left drop down menu, you'll see a bunch of different charts and break structure examples for you guys to just literally copy and try to make sure that your pictures look exactly like this. So thank you guys so much for watching. Don't forget to comment, like, and subscribe, and I'll see you guys in the next video.